Good morning, traders. Hello, and welcome to today's morning market call from whichever side of the country world you're watching me from. My name is Ian Elkington, market analyst at HFM, and we are going to be breaking down today's PPI data and what it means for the market. But first and foremost, I will want us to familiarize ourselves with the disclaimer that states the information herein is only meant for educational and informative purposes only and shouldn't be construed as investment advice to the financial markets. Does carry a degree of risk, and individual trading decisions remain the sole responsibility of the viewer. Now, looking at the markets, HFM does have a very important account called Shield 500, and this is a special account for traders who have joined into the markets, and this is how it does work.
Introducing the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind knowing up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
Indeed, only with HFM you have an opportunity to open the Shield 500 account. Whatever money you do deposit between $10 and $500. If you do incur any losses within the first 25 days of trading, we shall back you up to $500 in terms of tradable funds. Terms and conditions do apply. Now, moving over to the economic calendar, this is where we usually start our day generating ideas from. And I would want to start by looking at yesterday's numbers, whereby we did receive consumer price index data. This is basically inflation numbers, which actually did beat forecast, did tick to the upper side by more than 0.5% compared to last year a similar time. Now, we did have the forecast at the previous number 3.3%. We were anticipating inflation numbers to come out at 3.7, but actually we did see the numbers ticking way to the upper side at 3.8%. Not only on the CPI data itself, but also on the core CPI, we did see the data ticking to the upper side where the previous number was 2.6%. We did see the numbers actually ticking to the upper side at 2.8%. Now, yesterday was all about consumers. Today we shall be looking at now the producers, whereby for consumers to consume, there has to be producers who are producing. And for this particular case, we are going to reflect on producer price index today. Now we are going to get the PPI core, and we are going to get the PPI itself. Now this is going to be the PPI data, and this one is going to be the one excluding food and energy. Usually we pay attention to the core PPI because it tends to give a clear direction of where the markets are headed to. Looking at the previous number, that stand at 3.8%. We are anticipating inflation to tick to the upper side at 4.3%. The actual number will be updated in the next 5 hours 23 minutes when the data is officially released, and this data usually comes from the Bureau of Labor Statistics. This is the BLS, who are in charge of releasing this data. Now, looking at the most important thing when you're reflecting on this data is the effect it's going to have on the markets. Now, usually, if the data comes out higher than anticipated, where it beats forecast, let's take, for example, the forecast is at 4.3%. If the data comes out higher than 4.3%, it's usually seen as positive for the dollar or bullish for the United States dollar. Whereas, on the other hand, if we see the data coming lesser than forecast, which comes out lesser than 4.3%, it's usually regarded as bearish for the United States dollar. Now, we are going to get the data today during New York session, which is going to be in the next 5 hours, 22 minutes and counting. And this potentially could be the what we need to spark volatility in the markets as we do speak. We are going to get a few Fed speeches today, from Fed Colin and from Fed Kashkari, who are going to release their speech today in the next 8 hours, 22 minutes, and 10 hours, 7 minutes, respectively. We are also going to get major speeches from the European Central Bank, the head of the European Central Bank, President Lagarde, who's going to be speaking today, and this potentially could spark volatility on the euro pairs. Now, usually we pay attention to the biggest forex participants. She is the head of the European Central Bank, whatever she does say could potentially move prices because she is going to give us forward guidance of where the markets are supposed to head to in the near future. Now, it is currently earnings season continuing. We are going to get earnings today from RWA. We are going to get Siemens also releasing their earnings before the market does open. Alliance is also going to release their earnings today. There is no time stipulated. Alibaba is not going to be left behind, and they shall release their earnings before the market does open. Quite interesting, noting how this will potentially move prices. But next week is going to be the highlight of the earnings season, whereby we are going to receive earnings from Nvidia, which is the most valued company in the world currently as we do speak. The data is going to come out after the market does close. We do anticipate the earnings per share to come out at $1.76. Quite interesting, noting how this could potentially move the Nasdaq and the S&P 500. Also, the Dow Jones is not going to be left behind. Now, if this is the most interesting part where we are switching to. Reflecting on now technical analysis, what are we are anticipating in the markets? And we yesterday, if you've been following me in the morning market calls, we were looking at key levels on XAU USD. Now, just to put it into perspective, to bring everyone up to speed, we have been seeing gold consolidate for quite some time after an explosive move that we did see last week on Tuesday and Wednesday. Ever since, we did see prices consolidating on Thursday and Friday. During this week's Monday open, we did see prices gapping to the downside, but immediately during New York session, we did see prices closing well above the opening levels of Monday. Now, looking at yesterday, the markets already started pricing in the data for sticky inflation numbers, and this is sometimes what you're going to anticipate in the markets, where before major news releases, the data could already be priced onto the charts, where we did see gold actually selling quite aggressively before the news release up to this green candle here, which was close to, if we can reflect on it, this was more than 1.56% to the downside. But when the data was released, yes, it did come out higher than anticipated, meaning the Fed Reserve could be prompted to keep interest rates higher for longer. Now, if the Fed Reserve does keep interest rates higher for longer, it means that indeed gold will be anticipated to weaken, because remember, gold is not a yielding asset, but the dollar is. If the dollar continues to strengthen, then you would anticipate XAUSD to continue moving further to the downside. Now, a few hours later, whereby the next candlestick after CPI was released, we did get a doji candlestick, more of a hammer, but the subsequent candle that followed afterwards, we did see massive, massive momentum continuing to the downside as the markets were pricing in the information of Fed Reserve keeping interest rates higher for longer. We did see prices moving another 1.4% to the downside, did tap into a level that we have been paying attention to for quite some time, which is around 46, 47. But clearly, we did see prices closing back within that range. Now, this is something that we have been looking at once again. Prices did tap onto the 200 period moving average. Grab liquidity closed well within that range, signaling that yes, indeed, this region is still holding a support. And then we did see the markets giving back some of the gains that it did make earlier on in the day. We did see prices closing around the fib level, if I can just put it into perspective, from this most recent swing high to the most recent swing low. We did see prices closing well below the Fibonacci. We are getting signs of sellers in the markets as we do speak right now. If I can highlight that level, we are seeing still signs of sellers in the markets. Now, remember, we are anticipating PPI data to come out today. If the PPI data also comes out higher than anticipated, it means inflation is sticking to the upper side, and hence you would anticipate the dollar to continue strengthening, potentially moving even further to the downside. We do have this region holding signs of sellers in the market during Asian session. It is currently London session, 11 minutes into 13 minutes into London session. We would anticipate the markets to continue moving further to the downside if the data does come out positive for the dollar in terms of PPI numbers. I would want to see how this level is going to be tested one more time at 46, 47. What I would want to see is a clear candle closing below this particular region for me to consider this region of support being broken and potentially acting as a resistance level for prices to continue moving further to the downside. And I have my eyes on the 4,500 mark, which is a psychological level in the markets. If we do happen to see prices breaking to the downside, this is quite a decent range, close to 4.32%, more than 2,000 pips to the downside when you're reflecting on gold prices. Once again, but remember, for us as traders, we would want to react to prices. Whatever the data is going to come out at, then we would want to make decisions afterwards. And looking at silver prices, silver has been rallying to the upper side compared to gold. We did see prices of silver yesterday tapping onto the 50 period moving average, and we did see prices continuing moving further to the upper side. We are clearly making high highs, higher lows, high highs, higher lows on the silver metal. And yes, indeed, once again, ever since 5th of May, 6th of May, we have seen silver prices aggressively move to the upper side. This is close to 19.13%. That's quite an interesting gain, and I will continue. I will consider looking at more net long opportunities, potentially for prices to come back at $89 an ounce on silver metal. If you do have this region that was yesterday's opening price, is now acting as a resistance region, also with today's Asian session trading. If you do happen to see a candlestick closing well above this region, I will consider looking at more net long opportunities on the silver metal. I would want to look at the dollar index next. Now, the dollar index is usually a measure of the dollar against a basket of six currencies. If we see the dollar index moving to the upper side, then potentially you would anticipate the dollar to continue strengthening. Whereas, on the other hand, if you see the dollar index moving to the downside, you would anticipate a weakness in the United States dollar. We have been seeing the USD index moving to the upper side ever since the lows that was formed on 5th, 6th of May. We have seen prices move more than 0.86% to the upside, signaling that yes, indeed, the dollar is strengthening currently as we do speak. Now, if it does continue moving further to the upper side, then it means the dollar, once again, is anticipated to strengthen, which when I'm looking at an asset like USD JPY, I would anticipate it to continue buying. Okay. Now, looking at UJ has been an important asset to pay attention of late, whereby we did tap into the 160 mark, the key level, the line in the sand, when you're reflecting on the dollar against the yen. We did get Bank of Japan intervening into the markets, and as you can see, we did get massive volatility, massive spikes to the downside as Bank of Japan did put an effort to stabilize prices of the US dollar against the Japanese yen. We did have a crossover yesterday where now the 50 period moving average went above price. We did see the 200 now going well below price action, and currently we are seeing prices correcting further to the upside. I still have my eyes around the 159 mark, 158.5 mark on the USD JPY. If we do happen to see clear signs of sellers in the markets here, I would anticipate the dollar to weaken against the Japanese yen as a result of Bank of Japan continuing in their efforts of stabilizing yen prices. But on the other hand, if we do happen to break and close above this particular region, which is the golden ratio between looking at the swing high to the swing low, if we do happen to see prices closing well above the 61.8 mark, I will consider looking at now net long opportunities further to the upper side, potentially for prices to come back around the 160 mark one more time. It's going to be dependent on the data that the United States is going to release in the near future. And also, we are going to be reflecting on what Bank of Japan is going to do. Thank you, Stephen. Kana, beautiful. Thank you so much. Much appreciated. If you have any asset you would want me to look into, I can see there is none in the chat section. Okay, beautiful. Now, looking at we have reflected on gold, we have looked at silver, we have looked at the dollar index, we have looked at the USD JPY, we have not looked at oil prices, specifically WTI, Western Texas Oil. Now, WTI is an important asset to pay attention to. Why? Because there is the reason why we have seen inflation ticking to the upper side is because we have seen oil prices also tick to the upper side. Now, whenever oil prices moves to the upper side, then it's going to create a ripple effect because an economy is usually run on energy. If energy prices are high, these costs are going to be passed down to the consumer, meaning for you and we are going to pay more for the same goods and services that we were compared to what we were doing earlier. Now, looking at oil, we did see prices gapping to the upper side, This was uh, this was last week's Friday closing prices. We did see prices gapping more than 3% on the open of Monday, considering prices was at around $95 per barrel last week on Friday. Currently, at the moment, it is trading at $100 a barrel, 100.8 dollars a barrel, signaling that yes, indeed, prices has moved to the upper side from Friday's closing price to where we are at the moment. Prices has gained more than 5%. Now, we were looking at this level yesterday while we were doing the morning market call, where prices did tap into the 100. Uh, Changing character. Prices is now forming higher highs, higher lows in the markets, higher highs, higher lows. We did have this region of resistance being broken to the upper side, is now currently being tested as a support. If we do get signs of buyers coming into the markets, I will consider looking at more net long opportunities further to the upper side, potentially prices taking out the highs that was formed yesterday during New York session, just 2 hours before New York session, around $102.84 a barrel on oil. Now, this is going to be dependent on what is going to happen over uh, in okay, Njoro, we are going to look at Euro USD. This is going to be dependent on what is going to happen between the United States and Iran. Yes, we did see the United States dismissing the proposal that Iran did put forward in terms of the ceasefire talks. Now, that did fall through. Tomorrow we are anticipating Trump to visit China. That is going to be something very important to look at, because whatever they're going to talk about is going to affect the markets. And in the long term, we will want to pay attention to what are the details of Trump's visit to President Xi. Is it going to bear fruit? One thing that we know they are going to talk about is energy prices, something very important, especially oil prices, and how they would want to maneuver that, especially as a result of the situation that we are seeing unfold over in the Middle East as a result of the Strait of Hormuz being closed, oil prices taking to the upper side. Then we would anticipate. Now, if the talks are going to be positive in terms of energy, we would anticipate oil to continue moving further to the downside, potentially stabilizing. But if we see more breakdowns, the ceasefire, no ceasefire coming onto the table, the discussions, the negotiations fall through, then we would anticipate oil prices to continue moving further to the upper side. Now, looking at Euro USD, beautiful asset, I would want to reflect back onto the economic calendar, where in the next 11 hours 39 minutes to be exact, we are going to get ECB lane speech first, but I will want to pay attention to Lagarde's speech more, because she is the head of the European Central Bank, and she has more impact compared to the other members. This is going to be in the next 11 hours, 53 minutes. Now, this could potentially move the euro, because once again, she is going to mention, she is going to give a direction, forward guidance of where the markets are supposed to head to. If she does mention that, yes, indeed, the euro is anticipated to head in the right direction, then it means the euro is anticipated to strengthen. Whereas, on the other hand, if she does mention that, things are not looking good for the euro, then you would anticipate prices to continue selling when you're reflecting on euro USD. Now, looking at price action, I did have this Fibonacci level from this most recent swing low to swing high. Prices did tap into 1.17886, but we did see massive selling into the markets. Now, if you reflect on Euro USD and XAU USD, almost similar pattern, whereby we have been consolidating, we have been ranging for quite some time. Yes, peep value, this has been moving, but in the long direction, in the long-term direction, prices has neither been making clear high highs, prices has neither been making clear low lows. Now, we do have this region of support around 1.17205. If we do happen to see candle closing below this region, of which we are getting signs of volatility as we do speak, this London session that has just opened, we did get this candlestick closing well below this region. Now, if we get this candle also closing below this region, then this region of support could potentially be have been broken, and could act as a resistance level in the near future for prices to continue moving further to the downside. If I was to reflect on selling opportunities, I would want to pay attention to how prices could react to 1.16759 in the near future. But on the other hand, if you get this candlestick closing well above this range, President Lagarde's speech being positive, then I will consider looking at more net long opportunities, potentially for prices to come back at around 1.17886 on Euro USD. So Euro USD, we would want to pay attention to the speech that is going to happen in less than 12 hours from now, where we are going to get the guidance of where the markets are anticipated to head to. We did get inflation numbers also for Germany yesterday, which actually ticked to the upper side. Most of the economies we are seeing inflation picking to the upper side as a result of energy prices also moving to the upper side. Now, if this does happen, the European Central Bank will want to keep their interest rates higher. Their main refinancing operations rate, they will want to keep it higher for longer. If they do happen to keep it higher for longer, then you would anticipate the currency to strengthen. In this particular case, we shall be reflecting on the euro. Now, if you compare the interest rates between the United States and the euro, the US has higher interest rates compared to the euro, meaning technically for investors, the dollar could be much more attractive compared to the euro. But in the near future, we are going to get more decisions being made, particularly in the next 35 days. We are going to get the Fed Reserve, the FOMC meeting, and potentially we could see Fed Wash chairing the first committee, his first committee, and that will be something very important to watch out for. The Trump era is going to come to an end on this 15th, this particular Friday, where not Trump's, Jerome Powell, sorry, Jerome Powell's contract is coming to an end this particular 15th of this month, and we do anticipate also on the 15th Fed Wash to be sworn in as the new Fed chair. Now, if that does happen, we usually see volatility. If you have been trading the Jerome Powell era, you have noticed there was a lot of volatility. Now, we would anticipate more volatility. If we reflect back on his most recent grilling by the Senate, whereby he was taken in front of the United States Senate and he was grilled and he was questioned, we did see the volatility in the markets also. We would anticipate that volatility to continue moving on this particular Friday when he is sworn in as the new Fed chair. Now, if that does happen, then Euro USD will be anticipated to move even further to the downside. So it's going to be a very important week for us as traders. Looking at the stock markets, looking at the indices, to be specific, the Nasdaq yesterday did move aggressively to the downside, but immediately did recover ever since the lows that was formed around 28,700. Now, currently, we are seeing the Nasdaq firing on all cylinders. We are anticipating data to come out next week for Nvidia, which accounts for the biggest share of the biggest weight in the Nasdaq, where we are going to anticipate if they do post better than anticipated earnings, their forward guidance, their whatever they have planned for the future. If it does make sense to the investors, they would want to invest back into that specific stock market, and we will see the Nasdaq actually moving further to the upper side. Now, currently, as we do speak, we do have a ceiling being formed at 29,381. If you do happen to break this region, once again, I would want to reflect on psychological levels. The next target could be 30,000 in the near future. The stock market has been doing really good over the past few trading weeks, and I would anticipate momentum to continue in the near future. The same could be said for the S&P 500, whereby the S&P 500 and the Nasdaq are positively correlated, where if one does move to the upper side, the other one usually does follow suit. I would consider looking at more net long opportunities after New York session does open. If we do happen to break above 7,439 mark, clear closure above that region, I will consider looking at prices potentially gravitating towards 7,500 mark on the S&P 500. The Dow Jones Industrial Average is being left behind compared to what the Nasdaq and the S&P 500 are doing, where we have been consolidating for quite some time. Prices has neither been having clear price action, making clear high highs or clear lower lows. But at the moment, we have been consolidating for quite some time. If I can put it into perspective, ever since this would have been on 7th of May till where we are trading at the moment, prices has been consolidating for more than 80 hours, neither making highs, neither making lows. And I would want to pay attention to what is going to happen to price action the moment we do break out of this consolidation phase. Now, the longer the consolidation phase, the larger the explosive move that will come afterwards if prices does decide to break the highs or the lows in the markets. I do believe we have looked at the major assets. We have looked at gold, we have looked at silver, we have looked at oil, dollar yen, we have looked at the USD index, we have reflected on the stock markets of the United States, and also we have looked at the euro against the United States dollar. I do believe that's going to be it for me for the morning market call. Once again, ladies and gents, my name is Ian Elkington, market analyst at HFM, and may the pips be with you. I shall see you when you do see me next. But before I do go, I would want to leave you with a promotion that HFM does roll out each and every month called the virtual to real demo contest, whereby as finances been an issue, funding your account, you have an opportunity to trade the demo account. And if you happen to be on the leaderboard, number one shall be credited $500 onto their trading account. Number two shall be credited $300 onto their trading account, and number three shall be credited $100 onto their trading account. Terms and conditions do apply. Head over to the HFM bonuses and promotions page. We do have more promotions for you as traders. Once again, may the pips be with you.